All right, here's a recap of the last half of the week this week. First of all, on Thursday, did get a break above my flag from Wednesday. Expected the measure move up to around 158, did not quite get there. I got in some 157.5 calls right here at 36, trailed me out at 35. This here is an instance where I should have gone in the money. I got a little greedy thinking I was going to have a guaranteed flag measured move. Did not happen. Out of the money calls, or puts for that matter, doesn't matter. As long as they're out of the money, if price action moves in your favor, you can still take a loss. And as you can see, 36 in, 35 out. Price was above where I got in at, so sometimes that happens. You just have to eat it and move on. Um, got a couple lines here. This wide range bar just put in a couple of significant levels here, 157 to 156.5. It's only a 50-cent range, so anything inside of there I was not going to trade. I'm not a range trader. I do not scalp. I want to catch larger moves. I don't want to waste my time on being chopped up in between there. You can accumulate 10% gains all you want, but when I get 100% gains consistently, at least 50% gains consistently, I'm going to continue to do so. Now going forward here, a little bit of a pattern here did develop for Friday, basically an upward channel. Okay, this is going to be the range I'm looking at here. On the open, I'm probably going to look for a move above here, above 157. So I'm going to go ahead and throw long above 157. Stop loss is going to be down here just below this previous wick. Another wide ranging bar right here, which actually spanned almost this whole range here from Thursday. So my stop loss is going to be down here around 156.5. I'm not going to have any bearish trades. Price action on the daily time frame over here is being sandwiched in between a significant cross right here of the 8 and 21 and the 50-day simple moving average. As you can see, this one may have been a fat finger order. I don't know what the case was here on this day, but a wide-ranging bar right here is just going to imply that there's a lot of chop in between these two levels. So hopefully we get a little bit of a push from this crossover right here, and it'll fly up through this 50-day simple moving average, which will take it well through my recent target of 158, which is this breakdown level, and carry it up to a much higher point. Could expect to see some new highs here in the next few weeks. It may need a catalyst. Depends on how many participants are actually in the trade. So this right here is going to be what I have planned out. If it breaks above, which I do believe it's going to, I may add above 157.40. Whoops. And in all fairness, I am currently holding some 157.5 calls for October 20th. Usually for that kind of a play over the weekend, I will hold it, or excuse me, I will buy it a few more weeks out into the future just for a little bit extra protection. But I am staying uber bullish on Apple right now. Initial target will be around 158, but I don't foresee that being too heavy of an overhead resistance. However, if there's a lot of sellers that come into play here, I'll happily take a little bit of profit off the table and let price play out and see what happens. This will be my trade plan going forward for Monday. We'll see what happens. Good luck.